So what really fuels the market when we're looking to scalp or trade the future markets, whether it's the E-mini NASDAQ or the micro futures or in a means of like maybe the ES or a means of currencies or commodities? The number one thing that we have to understand and what really makes the market move is liquidity. All right. And these are just areas, and you see it all over the chart, where the market is making equal highs or equal lows. You have to really have a keen eye for these setups. In a sense, you have to really follow the price action. Okay, and I always talk about structure, right? Being able to identify the direction of the market when we're looking to trade supply and demand. We know that, right? For anyone that's been watching the videos here on the channel. And I have a very simplistic concept of a strategy that works day in and day out. Okay, trading supply and demand zones. You know, looking for aggressive areas where the market's selling off, or aggressive areas where the market is pushing to the upside. Okay, we're looking to mark up our higher base chart and then move down to our lower base chart. Just simply using the concept of multi-chart confluence. All right. And that's what it's all about, because the more confluence we have on our side, the greater chance that the market's going to, or the trade is going to work out in our favor. Now, if you're someone that's new to trading the future markets or any particular market as a whole, I don't care if it's Forex or options, you have to understand one thing in particular that fuels most markets and all markets is liquidity. And that's what the market makers have their eyes set out on and tripping you up as a retail trader. They want to set up pools in the market, what's classified as liquidity pools, or zones in the market, liquidity zones, to where they can stop out traders in a sense. They want to set you up into a trap by creating these areas in which they're going to go back and run. And you have to be able to identify these key areas on the chart, even when we're looking to trade certain areas of supply and demand, or order blocks, many people like to quote unquote call it. If you are, in the business of making money in trading futures, then you know that the market likes to do what? Take out one means of area of liquidity and chase down to maybe another area. Meaning, if it's taking out liquidity from a top end, it may be coming back to take out liquidity from a bottom end, meaning equal highs, equal lows. So let's cover this concept again. All right. When it comes to trading liquidity, what are some things that we need to really lay our eye on or look for? Well, yeah, market structure is definitely important. And I'm going to show you a couple of areas, and one particular just yesterday that was a very, very valid area to take a very good trade from off the gold chart. Okay, and you'll see setups like this on the NASDAQ futures, the ES futures, if you trade oil or natural gas, whatever it is, you'll see these same type setups, because again, the market is fueled simply by setting up areas of liquidity. Okay. They've got to be taken out, just like how we wait patiently for the market to come back to fill an area where there's an imbalance at. Why? Because to me, when I see an imbalance resting back out of zone, that kind of lets me know that, hey, like right here, this is aggressive push to the upside. They skipped in between where maybe they were trying to fill orders quick enough, and it's probably orders resting back on the books, right? So I have a full-on strategy in how I actually trade that. It's very simplistic. But when it comes to liquidity, what is it that we're looking for? Again, we're looking for those equal highs and equal lows to be formed and be taken out. So with our eyes laid on a chart, let's say use the higher base, like I use a 60 range chart when it comes to trading gold. On the NASDAQ, I use a 120. And the reason why I trade range-based charts, there's no rhythm or rhyme to it, mathematically speaking, okay? I just like to look at them because to me, I'm able to see the pushes in volume, and the charts are cleaner to the eye. There's no long and big wicks on candles of such nature, and it just, to my eye, is just cleaner. Okay, that's the only reason why. If you trade time-based charts, or you trade any means of another chart style type charts on a basis, then continue doing so. Whatever works for you, I always talk about, continue doing it. Do not deviate from it, as long as you're profitable, okay, and consistently profitable. Now, let's take a look here. Yesterday, what we saw was the market was, let's say from the 20th, which was Thursday, coming into yesterday's trading session, the market made a low here, a lower high, and then it made a low. Okay, so this was the high that it made, the most recent high that it came off of into the London session, early hours of Thursday morning. So when it finally made its high here, it came down, made a low, lower high, and broke below some lows right here, right? Took this low here out and this low here out. So we can say, okay, the market is reversing to the downside, right? Okay. And then we can look for what? Key pullbacks to key areas of supply to go short, right? That's what we talk about normally. But if we are following structure where it made a low, a lower high, and then made a low here, on its move to the downside, what we need to also focus in on, even though this right here may have been a supply area, yes it is, and the market goes back up there and tests the area of supply resting right here. What it did was when it came up to test supply, the wick of this candle came up and tested these highs right here as well. So as it was making a low, a lower high, and making a final run here, okay, it made a lower high right here. It made a low. But when it pulled back to this area right here, it made equal highs resting right here, okay? So basically we have equal highs that are setting up to where now we've got an area of decent area of liquidity that's now being printed on the chart, right? So you have to keep your eye on things like that, okay? So we can look for a valid setup. So when the market pushed up here, it broke above an area of structure to tap into this area of supply. And when it tapped supply, it came back down. So now we have an area of a demand resting right here prior to. So it made this low, pushed up, pulled back, made a new high, made a high right here, I should say, by making a higher high above these highs, breaking structure, and it left behind this clean area of demand. All right. So, and as it moved higher here, it created these equal highs right here. So what I like to do is, and I took this trade yesterday, is I like for it to see a pullback right here in this area here. Above us, we have these equal highs. So you can almost assume that, okay, we've got liquidity resting above, but we took out structure first to the upside and it came back and tested this aggressive area where there's a demand zone at, right? But yes, we are, moving bearish to the downside. But then we breaking structure back to the upside here, and we tap the supply zone. So there's a valid demand zone to trade from, is what I'm trying to say. All right. So the market comes back, we get the rejection here, and the thing about it is to get yourself into a more precise entry point. Again, we're following the same type of strategy that I talk about on the lower base chart, looking for a smaller zone within this zone here to take a trade from. Again, because we're trading off a demand zone. So I'm focused in on, all right, here's a demand zone resting right here. Let me move down to my lower base chart, right, to look for an opportunity to go long. We find it. If we get a 24 range high probability demand zone, which just like this is a high probability demand zone off the 60 range chart. I'm going to move down to my 12 range. If I said 24 range, I'm sorry, guys. On the gold, on gold futures, I trade the 60 and the 12, okay? But, anyways, pulling back to this area here on the 60 range, I move down to the 12 range chart, and I'll look for an opportunity to go long, all right? I'm going to be mindful because what I see above here is these equal highs here, knowing that the market could do what? Go up there and want to test those areas and take out that area of liquidity. As you see here, it did that. It tapped into the demand zone. All right, rejected off of it, pushed up, and took right out above these highs right here. Okay, it grabbed an area of liquidity. So what could it possibly do now? Well, we just got another structure break. Pushed up, pulled back, and broke structure above here. It may come back and test this area and want to run higher and maybe break above these areas of highs right here. If you've got equal highs stacked up here just as well, to where the market may want to come down and test lower areas, maybe another demand zone, and test the upper areas of where there's more liquidity resting at. There are equal highs up here, okay? Anytime you see where there's the market sets up where it has a high, fall another high, resting up here. These are three areas of where highs are being stacked at to where the market at some point is going to run it because there's liquidity up here. This is what I like to talk about where they are creating liquidity zones or pools within the market. They may not immediately take them out, where they'll push up, pull back, make it, and then come back and take it right back out. They may make the liquidity pool here or this zone where there's liquidity resting at and then come down to some area and maybe tap off a demand area and come back up and break above here, just like they did right here. They created this demand zone on the way up to the upside, came back, tested the demand zone, and took out this area of liquidity right here. So that's what I'm talking about. I know we got our eyes focused on looking for these supply and demand zones, but you also got to be, mindful of the areas of liquidity. I talk about in many videos about once you get into a trade, the areas to look to take your trade back out at, whether it's a gap to be filled, on the candles back up to the upside in this case here. Maybe this is going to be your stopping point because there's a bit of area of resistance here. But look above you as well to see where the market could take out, maybe continue running to the upside and take out areas of liquidity. I'm going to show you another example just as well. All right, so pay attention like right here. Okay, you see the market running to the downside. So we flip from sorry about that, from bullish back to bearish, right? The market's making lower lows and lower highs to the downside. And the market then does what? Okay, as you can see, it pushes to the upside, taking out some areas of structure as we move higher. Makes a run to the upside, pulls back, creates an area of, there's liquidity resting right here. We got equal highs sitting here, all right? Pulls back, breaks above that area, comes up here, but there's already an area of liquidity resting right here. So what does it do? It comes up there and takes that area of liquidity out right above these highs here. Now, what we have over here, you see the market push down right here and pull back, push down and pull back. It created basically equal highs right here. So when the market pushed up here and pulled back, broke structure higher above these highs and taking this area here out, it came back to what? A demand zone resting right here. You see that demand zone? Aggressive buying, taking structure out, breaking above this area of liquidity, pulls back to taps into a high probability demand zone. Then we're going to move down to what? The 12 range chart to look for a smaller zone to get us more into a precise entry point. That is the purpose of the lower base chart on the 12 range chart. If we're looking at the NASDAQ, it would be the 24 range chart. But that is for us to identify a smaller area of demand to take a trade for to go back long, right? Again, we're looking to fill gaps to the upside. But if we look as well to the left-hand side of the chart, we can see liquidity above these highs right here, okay? Above these highs. That the market had already ran this high right here. So if we see liquidity resting, I always talk about looking to the left-hand side of the chart, there's liquidity right here. And there's also more gaps that need to be filled to the upside. So when the market pulls back here, what does it do? Taps the area of demand, pulls back to demand, runs all the way back up, takes out liquidity here, and goes up here and fills the gaps on the remaining portion off of this swing to the downside, but fill these candles back to the upside, taps into what? This area of supply resting right here and rejects it. So all I'm trying to say is that the concept of liquidity is very important when it comes to overall trading futures. Why? And it doesn't really matter if it's just trading futures. It could be Forex or any other market in particular. But because we're trading futures, I wanted to really break this down and show you. That is the number one thing the market makers are really trying to focus in on to stop you out. And you will become partial liquidity, or will become liquidity if you allow yourself to get set up in their traps, is what I'm trying to say. So that's the reason why I say, okay, look for the market to fill gaps back in when it hits an area of supply or demand. And also be looking at areas of liquidity that could help you hold your trade maybe longer, because they may want to run up there and take those areas out. As you've seen, two examples I just showed you, they pulled back to a demand zone here, pushed higher, took out liquidity, and filled more gaps to the upside, just like right over here. They did what? Came back, hit this area of demand. There was liquidity resting where? Right above here that they just created because they had a high, came down, made an equal high here, came down, tapped this area after breaking structure above here, tapped the area of demand, ran up there and took out the area of liquidity and filled right back up on this gap right here in this candle right here to the upside. Area of supply, boom, they rejected it and pushed lower. You've got to be able to see things like that. That's the ebbs and flows that I talk about in a lot of videos, that you have to read this market, read these markets, okay? Follow price action correctly if you really want to capitalize and make money in this business. So simply put, I just want to show you guys that today. It is Saturday, but I wanted to have some more content to be able to provide to you. And just keep your eyes on things like that, regardless of the market that you actually trade. Don't care if you trade natural gas or crude oil or wheat or grain, whatever it is in the future markets. Just keep your eye on liquidity, because that is the number one thing that fuels the markets, okay? Now, if you're interested in getting the trade breakdowns while walking through trade setups, these are setups that I take and I post over on our Discord community. Like, I took this gold setup right here, okay, and went to the upside, right? Also took another trade on the NASDAQ yesterday. So, and I'm only looking to take maybe 1 to 2 possible trade setups a day. I recommend people doing that because you'll safe net and safeguard your capital and your trading account by doing so. Profit, close shop, compound, and look to live the next day to trade again. That's what it's all about. It's growing and compounding in an account. Very easy. But if you really want the full insight of the trades that I take, more detailed insight where I break the trades down, you may want to become an elite channel supporter. The link is right down below in the description portion of the video. There are tons of trade breakdown videos that you receive to walk you through setup after setup after setup, talking about stop loss placement, profit targets, market structure, what I was looking at from, overall that led me to taking these trades. Okay. But again, the link is right down in the description portion of the video. Elite channel supporter link. Click on that. 2 tiers will pop up. Make sure to choose the second one. It's only $6.99 a month. That is it. Not a day, not a week. It's just on a monthly basis. Okay. And look, we've had tons of people that come that have become elite channel members. They have learned what they wanted to learn and moved on. I don't expect anyone to stick around forever. Once you become successful, become profitable, if this works for you, okay, because I can't make any guarantees or promises to anyone, because you know, what I see and how I trade may be different than how you may see it and how you may trade, okay? So you've got to really put the work in and, you know, try to make it work for you, okay? Again, I can't guarantee it, but again, it's only $6.99 a month, all right? Let's think about how much money you may spend on a day on a price of a cup of coffee for something that could be very inexpensive, pennies on a dollar a day that could be life-changing for you, all right? Outside of that, that's all I have, guys. I appreciate it. I appreciate all the elite channel supporters that are part of that private community and support my efforts as not only a trader, but as a content creator as well. And if you are a first-time viewer and you have not subbed to the channel already, please take the time to subscribe by clicking on the sub button down below. Yes, subscribe. And make sure to turn on your post notifications by clicking the bell next to that, all right? Outside of that, if you found value, please make sure to drop a like by clicking that thumbs up. Share the video content by simply clicking share just as well. I'm sure you guys may have somebody that may be interested in the video content, family or friend, whoever it may be. Share it, okay? By clicking on that share button. This video and maybe any other videos here in this channel, the ones that you watch, you know. But outside of that, that's all I have, guys. It's the weekend. I wish everyone a very, you know, safe and relaxing weekend, I should say that, before we get started into the next trading week coming up ahead of us. Take care. I'll see everyone in the next one.